Before we begin, let's walk through our webinar platform together. Each of the buttons at the bottom of your screen relate to sections in the On24 console. The speaker view is where you will see our presenters throughout the webinar. The slide view is where you'll see the accompanying slides. You can resize these widgets for a larger or smaller view. You may also follow along with a PDF version of the slides that can be found in the Related Content widget. In the Related Content section, you can access any accompanying materials for this webinar. This includes a PDF copy of the slides and many times will often include related resources. Using the Reaction button, you can react to content throughout the webinar. Reactions from our audience throughout the webinar will float along the console screen. Use the Q&A section to ask questions directly to our speakers throughout the presentation. In the Speaker Bio section, you can find out more about our presenters, including their contact information. If you need technical assistance, please use the Help button below. Many times, technical issues can be resolved by opening the webinar in Google Chrome or refreshing your browser. Finally, the Evaluation button contains our post-webinar evaluation survey. Here is where you can share your commentary and feedback on the presentation. We hope you enjoy our free webinar. Now, let's get into today's topic.
Hello, everyone, and welcome to From Deductions to Donations, What's Changing for Nonprofits under OBBBA. We're very grateful to have you here with us today. We have a couple other logistical items we wanted to go through before we get started. The first one is that our marketing and training support team members will be responding to any troubleshooting or CPE questions in the chat. And also feel free to put any questions in the chat about the content or the conversation, and we'll try to get to as many of those questions as we can. But please remember that we're going to do a 15-minute bonus add-on Q&A at the end of this session that will go beyond the 1 hour so that we can have a more robust Q&A. Secondly, if you'd like CPE credit for today, please remember that we're not going to be using polling questions, but we're going to be using attendance checks instead. So those will automatically pop up about every 13 minutes or so, and you'll hear a ding. So please remember to click on the box to record your attendance. And after about 3, you need to answer 3 of those attendance checks, and you should not see any more. And then finally, remember that the slides will be available for download in the Related Content widget. So feel free to go there. And towards the end of the slide deck, there will be a slide with some links to more reference and more information that we think will be helpful to you. All right, so now I'd love to introduce who we are and who YPTC is. So YPTC, your part-time controller, is a professional services firm, and we specialize in nonprofit financial management. We have more than 30 years of experience, and we have a team of about 800 people located across the nation. We serve over 2,200 clients throughout the United States and a few in countries overseas. Our services include accounting, reporting, data visualization, best practices, just to name the few. There's a couple things we don't do, though, and that is we do not provide tax or legal advice. And so please remember that anything we mention here today should not be construed as tax or legal advice. And then finally, we are happy to be joined today by one of our partners at MyFedTrainer. So my name is Debbie McLeod, and I'm not a partner, I'm a manager in YPTC's Raleigh-Durham office in beautiful North Carolina, and I'll be your moderator today. We're joined by a panel of experts who bring insight into policy, compliance, and nonprofit strategy. Hatsy, Derek, and Rachel all have great technical knowledge, but perhaps even more importantly, they have real-world, hands-on experience in the not-for-profit sector. So Hatsy, would you like to tell us a little bit about yourself, both at YPTC and in your prior life?
Sure, thank you, Debbie. As Debbie said, my name is Hatsy Harriet, but I go by Hatsy Cutshall. I am the director of YPTC's Government Awards Management Department. I've been with YPTC now for more than 14 years, and I've had the privilege of leading teams first in DC, then in Phoenix, and more recently in New England. Before I came to YPTC, I was the CFO of two largely federally funded nonprofits, where I learned the rules that govern federal awards long before there was such a thing as uniform guidance. I've established and maintained systems to ensure organizations can meet the reporting requirements on their awards, and have helped many organizations apply for and administer negotiated indirect cost rate agreements. I'm excited to be here today to share my experience and insights, and hopefully give you some ideas for managing your organization through these uncertain times. Derek?
Thanks, Hatsy. I'm Derek Dreyer, and I lead the Government Funding Department at YPTC. Just as Hatsy helps our clients manage and report on existing grants, my role is to help our clients find and apply for institutional funding, including both government and foundation grants. I have nearly 25 years of experience as executive director of a nonprofit myself. I'm a firm believer in the value of mission-based organizations. I was a frequent applicant for institutional funding of all kinds during that entire term. And I also served as a peer reviewer for multiple funders during that period. And today I serve on boards and committees for several nonprofits. So I understand many of the needs and issues you face. I look forward to sharing my knowledge and experience with you today. Rachel, would you introduce yourself, please?
Sure. Hi, everybody. My name is Rachel Werner, and I'm the principal at MyFedTrainer. And we provide compliance training to entities that either recipients, subrecipients, pass-through entities, or contractors, basically anyone who has to administer federal grant awards. And we provide more detailed understanding of the uniform grant guidance and also the rules and the cost principles and the regulations around the complexities of federal grant administration. So we do this through virtual and in-person training. And so I do a lot of training and speaking with entities about all of their different types of challenges and problem solving related to the administration of grant awards.
Great, thank you, Rachel. So if you are like most people, you probably don't want to read a 1,000-page document of technical material. So we've done some of that work for you. Our goal today is to first unpack the key provisions of the bill, and then we'll explore some broader impact on nonprofit strategy, engagement, and planning. And then we'll wrap up with some actionable steps to help prepare for what's coming ahead. And then don't forget, we have that 15-minute additional Q&A at the end of today's discussion. So let's start off today with a look at the key provisions of the OBBBA. So Rachel, sometimes activities coming out of Washington, D.C. can be confusing and difficult to understand, let alone trying to implement and comply with all the new rules and regulations. Plus, not all directives carry the same weight and authority. Can you tell us a little bit about how all this activity happens and what is the framework in which it occurs?
Sure, and I think that this graphic here illustrates this quite thoroughly, because I think that we hear a lot of things about statutes and guidance and regulations and executive orders, and where does everything fit in? So I think that this is basically a triangle of directives that are that the GAO the Government Accountability Office puts together. And that just kind of gives you an understanding of sort of the weight that some of these directives have that carry more weight than others, and also just help guide some of the other pieces. So at the top of the pyramid, this is what carries the most weight. These are the official statutes. These are the statutes that provide authority to agencies to administer different grant awards, to have oversight over the different agencies and implementation. So these are the specific legislation and acts that are voted on and authorized by Congress. So that includes the OBBBA, sorry. And those are the official statutes. So those carry the most weight out of anything that is issued within the federal government. Then we have regulations. Now, regulations are sort of taking a step more just to provide a little bit more guidance to those who actually need to implement. So they need to be implemented by regulations, and these are legally enforceable. So these are things like the 2 CFR 200 for those who unfamiliar, that's the Uniform Grant Guidance, which is the official authorizing document that provides the administrative requirements and cost principles for administering all federal funding assistance, and also the federal acquisition regulations, which is what contractors have to adhere to regarding their cost principles and administrative requirements. So those fall under the statutes. And then the ones which carry, I would say, the least weight would be the guidance. So those are your notices of funding opportunities. So if you're going after funding opportunities, much like what Derek was mentioning before, these are what the agencies issues to say, hey, in order to get funding through this particular program, you need to adhere to these requirements. So those are implemented by the agencies, but they are not generally legally enforceable, much like the others, the statutes and the regulations. What I want to make you aware of is that there's been a lot of talk about the executive orders, and you can see the executive orders are not in this pyramid. So what I would suggest looking at the executive orders is that they are not legally enforceable until they are implemented through a statute or regulation. So you can look at those executive orders as more of a wish list of priorities, but until they are included in a statute, in a regulation, they're not legally enforceable. And that's why there's been a lot of lawsuits. So you can see why those have come to the forefront in the past few months.
Rachel, this is so helpful, and it gives us a clear idea of the directives that come out of the federal government. So the OBBBA became law on July 4th, 2025. So that means that it was actually a bill approved by Congress, and it sits in the very top of that pyramid. So it carries the most weight and authority within that framework. So what we've done is we've been monitoring this bill closely, particularly the effects on nonprofits. And we obtained information from a wide variety of sources. And some of those sources have differing opinions, both positive and negative. But what we do know is that the full impacts of the bill won't be fully clear until it's fully implemented. However, there are some key provisions that we know will affect nonprofits, and some of these are through tax-related changes for individuals and corporations. So Derek, what are some of the new rules that affect individual charitable giving and even corporate deductions? And how do you think these changes might affect not only the donor behavior, but also how nonprofits respond to fundraising strategies?
Thanks, Debbie. Yeah, there are a lot of changes ahead. One of them relates to the standard charitable giving deduction. The bill raises the standard charitable giving deduction for non-itemizers to $1,000 per individual or $2,000 per married couple filing jointly. And interesting fact, 90% of Americans do not itemize their deductions. So this may encourage charitable giving. The Joint Committee on Taxation actually estimates nonprofits could receive an additional $74 billion over the next 10 years, thanks to this increase. At the same time, the bill also sets a floor, 0.5%, and a cap for deductions. That's 35%. Both of those percentages refer to the adjusted gross income, and they include any state and local tax deductions, often known as SALT. And those are provisions that could actually deter really wealthy donors, as amounts below 0.5% or above 35% won't be deductible at all. Well, let's look at the good news first. One effect this bill is likely to have is I think it's going to democratize the way people give to nonprofits. While very wealthy people may have less reason to give enormous sums, regular folks like you and me will have more reason to give small sums. And overall, I think that's a good thing for nonprofits. They ultimately need and want to have the buy-in and support of as many people as possible and demonstrate that. Turning now to corporations, corporate contributions will be subject to a new floor under the tax law. Corporations that make gifts to nonprofits will not receive a deduction until the level of the contribution is at least 1% of the corporation's taxable earnings. The ceiling remains unchanged, 10% taxable income. New in this law, corporations that make larger contributions can also carry them forward now for 5 years. There was a study commissioned by the independent sector that estimates the floor could reduce corporate contributions by as much as $45 billion over the 10 years ahead. But Debbie, as you said a moment ago, this is all conjecture. We don't know how it's actually going to play out. One of the things that I've heard colleagues at nonprofits discussing and fearing is the potential for what they call bunching of contributions. In other words, a corporation might give a large sum in 1 year to ensure it exceeds the floor, but then sit on the sidelines for the next year or two. It's worth remembering that what comes in 2026 and beyond is unknown. These are just guesses, but let me also remind you that this year is a great time to seek gifts from both individuals and corporations. The law hasn't changed yet. Looking how that plays out with individuals, large gifts from individuals were down in the third quarter, and actually that tracks with prior periods when tax changes were being considered and implemented. But in each such prior period, giving rose strongly once the tax changes were fully understood. The fourth quarter is upon us. As you all know, it's traditionally the best time to seek individual gifts, and we have a strong stock market, which has the potential to bolster those. Same is true for corporations. Well, again, there are concerns about what could happen next year and in the years following. There's no floor in place this year. We know some corporations have been hurt by tariffs, but others are flush with cash thanks to decreased regulation. So it's a great time to get out there and ask. Now, we also have 2 new excise taxes to review. Those of you who receive funding from foundations may know that private foundations must pay an excise tax of 1.39% on their net investment income. Now, some public charities with highly compensated staff and universities or colleges with large endowments will also have to pay an excise tax. First of these is likely to affect, honestly, only a very small number of nonprofits, those that offer certain employees a salary in excess of $1 million, or they may pay former employees such a sum. The tax will actually apply retroactively going all the way back to 2017. And in these cases, it's going to be the organization, not the highly compensated individual, that will have to pay a 21% excise tax. The second of these tax changes will affect the wealthiest universities and colleges, those that have more than $2 million in endowment per student. We abbreviate that as EPS. They will face an 8% tax on the net investment income of their endowment. That's lower than the 21% rate that the House sought in an earlier version of the tax bill. Universities that have an EPS between 750,000 and 2 million will pay a 4% tax. Those with EPS between 500,000 and 750,000 will pay 1.4%. So we see different tiers of this tax applying. Any college or university with fewer than 3,000 students, or any college or university that has less than $500,000 in endowment per student will pay no tax at all.
So Derek, thank you for all that information, and it's good to know. And we had a question come in just now about those changes in charitable giving. Will they be in effect in 2025 or 2026? And those are 2026, correct?
That's
Yes.
correct. All of this will start to apply in the next calendar year.
Okay. Thank you. So it's good to know we have that standard charitable giving deduction for those who don't itemize, and that will be $1,000 for an individual and $2,000 for a married couple. That is for 2026. And we also have the implemented floor on corporate giving of 1% of the company's taxable earnings. And then there are some limitations on that giving. So again, we don't give tax advice, so it'll be really good to get advice from your tax professional if you need details answered. And remember, these changes on the giving, the individual and corporate giving, will be effective for 2026 giving. And then that excise tax on the university endowments, that has been talked about for many years, and here we finally have a new regulation on that, and that's going to be a graduated tax depending on your endowment per student. So thank you, Derek, for clarifying that for us. And then the executive compensation we talked about for those individuals having more than $1 million in earnings. And just a reminder that that 21% tax is on the organization. The organization pays that. And where I've actually seen that happen is when you have an executive director or a highly compensated person leave an organization, and maybe they have some sort of taxable 457 plan or some kind of retirement plan. And if they get a lump sum payment, well, then everything becomes taxable. And I've seen that $1 million threshold get triggered. But Hatsie, so what are some of the other changes that will affect probably a very wide variety in the not-for-profit sector?
That's for sure, Debbie. Among the first, you probably heard that the employee retention credit, which we all thought was pretty much behind us, well, now it really is. You may remember that the IRS paused acceptance and review of those applications back in September of 2023. This generated a considerable backlog, and it as the IRS dug into potentially fraudulent claims. They resumed accepting new applications last August in 2024, and at the time there was an original final application date of April 15 of 2025. But under OB3 or OBBBA, the IRS will not consider employee retention credit submissions made after January 31st of 2024 for the quarters that ended September 2021 and December 2021. Now that said, we've heard from a few of our clients whose applications for those periods were submitted after that date. They've been accepted and paid, but if that's you, if you get such a check, then be sure to call the IRS and make sure that that was intentional. For the first time in more than 70 years, 1099s are changing. The dollar threshold has increased from $600 to $2,000 starting next year in 2026. And after that, that threshold will actually increase each year for inflation. And as noted on the slide, this is the first change to this threshold since 1954. It's been pretty stable. And finally, there's some W-2 changes coming along. For 2025, the reduction in the tax base for both overtime and tips will apply, and this does apply to nonprofits in many cases. The IRS originally said it was not changing 2025 W-2s. It has recently released a draft of a new W-2 for 2026, so you can see what it's probably going to look like. And that'll include boxes to capture the overtime and tip information that taxpayers will need to file their taxes correctly. So it's time, no time like the present, to talk to your payroll providers to learn what they'll need in order to provide the information that the individuals will need to file their taxes correctly, because that takes effect this year. The feds have already developed lists of professions and job types that are eligible for the tips exclusion, which will be effective this year through 2028. And in that case, the first 25,000 of tips, tip income per individual, will be excluded from taxable income for those 4 years. Non-exempt workers who work more than 40 hours in a week are eligible for overtime. So there's the exclusion on overtime may apply to those that earn overtime. That exclusion is the first 12,500 of their earnings. And then both of these exclusions, the one on overtime, the one on tips, phase out for single incomes greater than 150,000 or joint incomes greater than 300,000.
So it sounds like these filing changes will affect quite a few nonprofits one way or another. So we've got the ERC filings that are still under review. We have an increase in the threshold for filing 1099s, yay, up to $2,000 from $600, and that'll be effective for 2026 activity. And then finally, we have the change in the W-2 reporting for earnings related to overtime and tips. These will apply to 2025 earnings, and there's going to be some limitations in both the types of professional jobs that are eligible, as well as some thresholds and floors. So as Hatsy said, now is the time to be contacting your payroll provider to make sure that you're ready for the changes. So one change that many nonprofits have been bracing for is the level of federal funding that will be available when the new fiscal year starts October 1st, which is already next week. So Hatsy, what do we know about the level of federal funding, how it might be affected, and are there any actions that organizations can take now?
Thanks again, Debbie. Yes, as we mentioned before, there's no time like the present to think ahead. With likely less federal funding available, there's most likely to be less state and local funding as those jurisdictions scramble to fill gaps in their own budgets, which we anticipate. We can't predict, we're not making predictions, but very likely to happen. If you haven't started doing so already, explore other sources of revenue as such as corporate and foundation funding. And that's something Derek's doing a lot of these days, helping our clients find alternative sources, especially when they've been notified of grant terminations. And just remember that the new floor on corporate giving doesn't kick in till next year. Don't overlook the potential for earned revenue options, such as subletting some of your office space, charging fees for some of your programs, selling merchandise that promotes the organization's work, and sometimes even consulting on your specialty. look at all your funding sources, not just your grant funding, but look at the level of risk on all your funding streams in light of the huge shifts that we're seeing in the economy, some impacted by federal actions, some not, and develop different scenarios. Yes, most organizations have a budget, should have a budget, but you need to build that budget using different assumptions. That sounds like a lot of work. It is a lot of work, but it can prepare you to be ready for sudden changes, many of which we've seen happen this year. And then don't forget the impact on these cuts or changes on your partners, such as subrecipients, if your organization does pass money through, if you're the prime recipient of federal funds. So, Rachel, can you speak more to the impact on state and local governments and how these impacts might filter down to nonprofits?
Sure, absolutely. And just a little terminology clarification for those who might not be familiar with recipients, subrecipients, pass-through entities is that a recipient receives funding directly from a federal agency, and we're talking strictly about federal funding. Pass-through entity could be a state government agency, could be a nonprofit, tribal, or nonprofit entity, and those pass through funding from the federal agency and distribute that to other organizations, mostly nonprofits, but it could be state government, local government, and so forth, and other types of agencies. And then you have subrecipients. And so subrecipients are the recipient of the pass-through entity's funding. And so they receive funding in the form of grants and are actually doing the work that is included in that funding opportunity announcement on the goals and objectives of the grant programs. So when we talk about this, we're really talking about pass-through entities, which what we're talking about states, local government, municipal agencies, and tribal. So basically what we're looking at forecasting out in the future, and again, some of these are really going to take effect in 2026, but it's also looking ahead so that, as Hatsie was talking before about the fundraising strategy and thinking through the different available options that you should be considering, that should be on the table. But revenue shortages, I know there's been a lot written up and shared about the future of SNAP and Medicaid funding. There are huge cuts anticipated, which are going to impact the revenues and the budgets of these different entities. So that could mean different program shifts, cuts, and also it just depends on the state as well about how much cash reserve they have, how much funding can be used in light of some of these revenue shortfalls. And also, in terms of the government staff, state and local government agencies are very strapped, to perform a lot of different functions. So there could be some reorganization, some retraining. So if they're going to be serving in more of an oversight capacity, just expect that there could be some shifts, some changes, and some additional training that might be needed to ensure that they are able to provide that level of support. So just bear with them. They're trying to do the best they can. I work with a lot of state and local government agencies, and I know that they're aware of these and really trying to do their best to work with the subrecipients and their other entities. And also in terms of the reprioritization, there's been obviously a huge shift based on the executive orders and what has been prioritized in this administration. So in terms of what we anticipate, we're seeing a focus more on rural areas. We're seeing a focus on innovation, but not including green technology, but more innovation efforts that could lead to better economic incentives, better economic growth. Also seeing a focus on workforce development. So that could mean programs for community colleges, nonprofits, or other entities that are promoting that. So there's been a lot of focus on economic growth. Also infrastructure. So infrastructure is an area that has been a particular focus in this administration. So while we do know that there are going to be program recessions and other cuts across different agency programs, we do anticipate certain areas will receive a boon. Obviously, we know about immigration enforcement and defense spending, but there are other areas, other discretionary funding areas that could also see a lift. And so we'll see some of those different funding opportunity announcements coming out in the new fiscal year and see how agencies are going to prioritize those areas.
So we definitely have some changes to consider and plan for, particularly keeping in mind that federal funding does have a trickle-down effect through states, local governments, and even pass through other nonprofit pass-through entities. So it sounds like diversification is going to be very important, really trying to leverage other sources of revenue from private funders, corporate funders, and even some earned revenue, maybe from unused facilities. Also, flexibility will be very important as the government refocuses its efforts and its oversight on certain things such as grant oversight. And then finally, good communication will continue to be super important because funding changes that affect you will also affect any of your subrecipients, should you have any. So I think maybe we could just pause for a minute right here for a couple things. There's been some things coming through the chat, some observations that the slides may not be advancing properly. And someone said, could you just mention what the slide number is that you're on? And so we're currently on slide number 19, if anyone needs to know that slide number. And then we've got some really great questions coming in. So I thought maybe we could respond to some of those right now. The first one, let's see, is the $1,000 and $2,000 deduction for donations also for donations to churches?
Do you want me to take that, Debbie? I'd be happy
Derek,
to.
Perhaps you could do that one.
A charitable deduction can be taken for a gift to any public charity under IRS code 501c3. A church, any kind of religious organization can automatically qualify for that 501c3 public charity status. So the short answer is yes.
Great, thank you. And then another person lost the feed for a minute, so they're just asking for confirmation. The 1099 threshold increase from $600 to $2,000 is for 2025 or 2026. So Hatsie, is that correct that that increase is for 2026?
Correct. That will take effect next year. I don't know that there'll be too many changes to the 1099 forms, but
okay,
that's true. So you can plan. You can begin to plan for it. Look at who you're paying above the $600 threshold, and it should reduce the level of effort for many organizations next year.
Okay.
Yeah, this is an area where YPTC is not just cutting edge, but bleeding edge. We're telling you about something that justifiably excites many nonprofits, the ability to file fewer 1099s in the future. But this relates to payments that are issued in calendar year 2026, and where you would normally file your 1099 form in 2027. So don't celebrate too early. That change does not take effect this year.
Okay, thank you. This is a good question. Let's see. Do employers pay payroll tax on the overtime? That may be a specific tax-related question. Derek or Hatsie?
I feel like that's a question for a tax expert or a payroll expert.
Yeah, it's not going to change the way employers do their payroll taxes, but it will have an impact on the individuals who may earn overtime. So yeah, we don't give tax advice, but
Right. That'd be a good one. I think payroll providers would have to know that as well,
Oh,
because
sure.
they would be helping you set all that up. So,
Yep.
okay. All right. Well, thank you. We have a lot more questions, but we have that extra 15 minutes at the end. So why don't we resume here? And next, let's talk about the steps organizations can take now to help position themselves for these changes as they roll out. So Derek, would you like to start off this section?
I'd be pleased to, although I have to say, Debbie, I honestly think you put your finger on the most important steps nonprofits can take already. One of those is communicate clearly and frequently about what you do, the value it has to your community or communities and stakeholders. So many times I've heard that only 5% of Americans, actually cited in the Chronicle of Philanthropy a couple of months ago, only 5% of Americans believe they've ever interacted with a nonprofit. And many of us were born in nonprofit hospitals, went to nonprofit preschools and schools, got involved with nonprofit churches and sports clubs and other things. We interact with nonprofits all the time, but Americans are telling us they don't understand what nonprofits are. So communicate why you're a nonprofit. Your focus on your mission makes you nimble and expert at what you do. Being a nonprofit is a good thing. Nonprofits provide services Americans want in every sector, in every geographic region, and across every part of the political spectrum. So tell people what you do and why, and be proud of it. Diversify your revenue streams. We've been preaching this for a long time at YPTC. The idea is pretty basic. If your chair has 4 legs and one of them has a crack in it or is a little shorter, the chair's not going to fall over, right? We do understand there are some nonprofits that cannot diversify their revenues, maybe based on their mission, maybe based on where they're organized or some other good reason. If you have the opportunity, seize the opportunity. And I saw a comment come in that, yeah, even the people in philanthropy are telling us that they don't have enough to help us. And it's true, there's a basic math problem here. The federal government is giving so much less money this year that even if all the foundations in the US were to act in unison, they wouldn't be able to make up the difference. Still, many foundations are giving more, increased their payouts from 5% to 6% or more. Some foundations have created emergency funds. I think it's true of all foundations. They want to hear from their grantees, and they're going to try to do what they can for their grantees. I serve on a foundation board myself, and we're trying to stay in close touch with our grantees, keep our finger on their pulse, and help them where we can. We can't solve every problem, but we're trying to address things together. And finally, let me just mention the idea of asking for gifts. I talk a lot with people that say, well, we're embarrassed to ask for money. I know our board doesn't like doing it, or we think it makes us look silly or weak. Americans want to give to charities. They want to give to charities in whose missions they believe, and they want to give to charities they believe are well run and run with integrity. And I bet you that accounts for everybody on this call today. So go forth and ask joyfully. Now let me get back to the slide because I realize I'm jumping off here a little bit. I think we've covered the 1099 question already, Debbie, right? The threshold will rise from $600 to $2,000 for Form 1099 MISC and 1099 NEC. But it doesn't start until 2027 for payments you make in 2026. We've also talked about the increased deduction for non-itemizers. And again, some 90% of Americans do not itemize their deductions on their Form 1040 every year. And so the ability to make a contribution and take a larger standard deduction for that is really good news for all nonprofits. It's a chance to build your donor pool to include many smaller donors. And finally, and this gets awfully complicated, but one of the features of OBBBA is permanent extension of the new market tax credits, or NMTC. Again, this is a complicated financing option. It's not for everybody, and I don't want to go down the rabbit hole too far because of that, but it's basically, it's a program that's available through the Treasury Department. It allows nonprofits planning certain capital projects to seek investors who provide money and are then able to recover that money over the course of the next 7 years, thanks to a 39% tax credit. So it's a really great option for some nonprofits in some situations. It's too complicated to get into in detail here, but if that's something you're considering, that's absolutely the kind of thing YPTC can help you with. Reach out to us later.
Okay, now, Derek, you're still up.
I'm still on. I promise I'll give the floor back in a moment or two, but I want to take a minute to consider some of the potentially less favorable implications of OBBBA for nonprofits. One of those is that there's a new floor on individual giving in 2026. It's 0.5%. Honestly, as former executive director of a nonprofit, I can assure you tax deductions are not at the forefront of people's minds when they make contributions. They want to give to missions they believe in and organizations that are run with integrity. Plus, 0.5% is a pretty easy hurdle. If you imagine some mythical person who has $100,000 in income, they only have to give $500 to meet that threshold. So go forth and solicit. And again, it doesn't apply until next year. So ask now, get gifts early if you can. There's also a floor on corporate giving in 2026. We've touched on this already. Corporations may end up bunching their contributions so that they can be sure to be over that threshold. However, you can ask them now. Threshold doesn't apply yet. And again, many corporations are thriving. There's a new excise tax on certain foreign remittances. And I know this has struck fear in the hearts of nonprofits that have programs abroad, or they may have an office abroad. There's a new 1% excise tax that will have to be paid on transfers out of this country of cash, checks, cashier's checks, or similar physical payments. And the good news is it doesn't apply to wire transfers. It doesn't apply to credit card contributions. It doesn't apply to ACH or crypto, or most of the methods that nonprofits are using today. But it's something to be aware of. Now let's look at Medicaid for just a second. Medicaid is becoming a lot more complicated in 2026. We're going to see certain nonprofits, particularly rural health providers, seeing a lot more demand for their services and a lot more costs. One of the things Medicaid will no longer cover are reproductive and family planning services. So that's just something to be aware of if you're a provider in that area. You want to start formulating your strategy for the coming year now. And finally, termination of clean energy credits. There are a number of nonprofits that have enjoyed receiving tax credits for clean energy initiatives, and those are ending soon is the easiest way to put it. The clean vehicle tax credits are actually ending at the end of this month, September 30, 2025. Wind and solar credits, the facility needs to be brought into use by the middle of 2026, and the tax credits will phase out starting in 2034. So all of those are ending a lot earlier than folks expected. Something to be aware of.
Great. And then Rachel, we have another EO to talk about.
Yeah, so this executive order is something that you want to really take a look at more carefully. So this was issued on August and it's going to have a lot of impacts in the federal grant making process. So it already was a very convoluted bureaucratic process, is going to be even more so. So remember when I showed you that little triangle before about executive orders, where do they fit in? This is their way of including that executive order and implementing it as an agency level into more of a regulatory format, so that it is implemented in greater detail and really expresses the priorities of this administration. So first thing to note is that all awards are going to be overseen by a senior political appointee designated within each agency. And what they're really doing is ensuring that each award that's administered is going to align with these presidential priorities. Now, just be aware that this has always been a focus, and you can even see it in some of the eligibility criteria and some of the notices of funding opportunity announcements, that they've included some of that language and verbiage about adherence to those priorities, but now it's really trying to codify this even further. So, and the political appointee, as an understanding of the federal agency process, you have career employees and you have political appointees. So those political appointees are really there to express the priorities of the administration in power. And so a lot of times they don't necessarily have as much of an understanding about the process that needs to happen in order to adhere to, the certain protocols and procedures that are in place to administer funding from the federal level. So just be aware of that. So these senior political appointees are going to oversee the process of probably career and other appointee officials within the agency. So this could mean an additional scrutiny of your grant awards. So agencies are going to add the clauses which are already in the uniform grant guidance, but they're going to ensure that those are included in all federal grant awards, which allows them to essentially terminate any grant that does not adhere to these agency or administrative priorities. And it will also require approval for agencies to access funding. So while some of you may use a cash advance method in order to draw down funding from the federal government, they want to move towards a cash reimbursement, which again could create more delays in receiving those funds and distributing them if you do have subrecipients, if you do have contractors. So in order to draw down funding, there has to be written consent before submitting any drawdown request. So there's going to be a little bit more to that process, more oversight and more hoops you have to jump through. So just be mindful of that, especially if you have to pay others, and factoring that into your budgeting process. So OMB issues updates to that uniform guidance every 5 years, and they make some slight updates every year. So the last major updates to the uniform guidance is already completed last year in October 1st of 2024. That's when they went into effect. But because of some of these changes, they're going to be incorporated into the guidance for some more oversight rules. So just be aware of that and how that could change some of the adherence priorities for compliance. So this will, again, submitting an application, it's not going to take 2 months to receive a response. It could take much longer than that. So if you're banking on some even renewal funding, just know that there are going to be anticipation of delays in the pre-award process, and also when you can draw down funding in the post-award process. So if you're looking for spending down funds, even if you get notification that you've received funding, please wait until you actually get funding confirmation that the funding's going to go through, because you don't want to spend funds and then find out that the application might be rescinded. So just be very mindful of that throughout this new process.
Great, thank you. So Derek, we've got some other changes coming, but we're getting down to our last few minutes. So maybe, what do you think? We could mention these briefly, and then we'll summarize through a lightning round, and then we'll have our 15 minutes of extra Q&A. Does that sound okay?
That sounds good to me.
Okay.
Absolutely. So I was just going to mention very quickly, we had a pocket rescission. I think many of you know a rescission is when the government cancels a federal award. A pocket rescission is when the administration asks Congress to cancel funding so late in the fiscal year that Congress can't actually convene to act on the consideration before the original authorization expires. And we saw that happen in August for the first time anybody can remember. Could happen again in future years. So something to be aware of. And then turning to what's going on literally right this minute, we don't have a budget. So here I'm talking about funding for last year that was canceled. But Hattie, what's the process for getting a budget for this year, and where are we?
Well, generally, typically, sometimes not, as we're seeing, we see various House and Senate committees propose 12 appropriation bills that do offer detailed budgets for each federal agency with debate and votes that follow. But this year, Congress decided to dispense with that process of talking to each other, and bipartisan negotiations have broken down. Instead, the parties have offered competing proposals to extend the current budget. Both of these continuing resolutions, as they're called, failed to get the 60 Senate votes required for passage. So, as Derek suggested, we have no budget for next fiscal year at this time. And Derek, what does that mean?
Well, Congress is on recess all this week. They're coming back into town on September 29. That's Monday. They need to hammer out a compromise by the end of Tuesday. They don't seem like they're in a mood to do that. So, Hattie, what we're talking about here is a shutdown showdown. We don't know how it's going to play out, but tell us what a shutdown is very quickly.
Mm-hmm. For those of you who were working in this sphere in 2018, 2019, you might remember our last and longest government shutdown. But if Congress does not extend the budget before October 1st, what that means is that all non-essential staff will essentially be furloughed, all non-essential services that they might provide. As you might imagine, they're very disruptive for nonprofits with federal awards. For the employees working in the federal agencies, they'll be furloughed, and few, if any, payments have been made. If Congress does pass a bill, the budget extension will end before Thanksgiving, so we'll have to go through all this again just in a couple of months. We've helped our clients through previous shutdowns, and we've posted advice on our website. But to summarize, we encourage you, if you haven't already done so, to talk to the staff at the agencies that you've been working with as soon as you can. It's worth asking whether they will allow the organization to draw cash in advance to prepare for the potential shutdown. It can't hurt to ask. They might say no, but they might also say yes. So at least ask. Most awards stipulate reimbursement. So awardees should only draw large advances if you have agency approval, ideally in writing. Talk to your stakeholders, your subrecipients, subcontractors, so they know that they might be affected. Update your cash flow projections. Look at scenario planning with and without federal payments. And if you're able to do so, diversify your revenue streams. Find other sources of money. It's easier to stomach cuts to one source if there are many other sources. If you need to bridge a cash gap, consider a line of credit. It's a little late to be doing that, but again, it's worth asking. So, Debbie, can you take us home?
Yes, I sure can. I was going to say we've got just a few seconds left here. So for people who can stay on for another 15 minutes, please do. And we'll wrap this up and get to some questions. But I'd like to thank our panelists today and all of you, everyone who joined this webinar. We're so glad you could join us. We covered an awful lot of territory today. But we appreciate you being on the webinar with us. And if you have to jump off, thank you for being here. And for those of you who can stay on for a few more minutes, we'll continue. So thank you. All right, so as we said, we covered an awful lot of territory in this section, that's for sure. We talked about some good news for nonprofits, such as the 1099 threshold increase, some changes in charitable deductions. We also talked about some not so good news that might affect nonprofits, such as the changes in corporate giving and the Medicare limits. We also have the executive order number 14332 that came out in August. But Rachel reminded us that this is an executive order and it doesn't even appear in that framework pyramid. However, there are some things that we can do to get ready for these upcoming changes. And Rachel, can you kick us off with some of the key strategies and tips?
Sure. I think one of the first things I would do is assess your risk of funding loss across all of your different revenue sources. So, and I would be very specific, especially for large grants, whether they are public funding or private, to determine, is there a low risk, is there medium risk or high risk? And if there is a big risk, how can you be proactive in determining other funding sources? Is this going to impact the programs that you have in place? Is this going to impact the employees? So really getting a true sense of what that risk is and how you could try to mitigate it. I think that's incredibly important now, especially including some varying understanding into your scenario planning and assumptions based on what we've seen and perhaps what some of your peer organizations have experienced. And I think that could really help you, at least empower you to put together a solution and a strategy to help move you forward. Another thing is collaborate. I'm seeing now more than ever organizations working together, sharing information, sharing resources, and also going together in different grant seeking efforts. So these could be your elected officials, they could be your partners, they could also be association advocates. I know that within each state, there is a nonprofit member organization. I'm based in Maryland, so Maryland Nonprofits has been very, very active in supporting their nonprofit partners. So I think finding those who can really help share information with you, where you can learn more from others, is incredibly valuable. And also thinking about industry member associations that might be specific to your sector would be important as well.
Great. Hatsie, do you have any recommendations and tips?
Planning ahead, and while we're kind of down to the wire on the potential government shutdown, as we discussed, you need to look ahead to the changes that will take effect next year to 1099s, W-2s, as well as the shutdown. And we have one question about formal approval and how the government shutdown might affect that. And really, if there is no budget as of October 1, drawdowns will not happen, even if those systems have typically been automated. Get your claims in now. We've heard a number of anecdotes that claims for reimbursement are taking a bit longer because of the defend the spend requirement. So expect delays if the government does shut down. Likewise for state grants, there's another question on whether state grant reimbursements will be affected. Yes, any claims for reimbursement will be affected. So stay informed, stay in touch. The National Council of Nonprofits does a great job of posting federal activity that will have an impact on nonprofits. So check out their site, stay in touch with your state nonprofit association. They have information that the National Council creates, but they also provide information that may be unique to your state or local environment. So stay in touch. YPTC has updates periodically on our website as well. So please try to find that information. If you have questions, feel free to reach out to us at the contact information at the end. And Derek, do you want to wrap up the strategies?
Well, I feel like I'm guilty of squeezing 90 minutes of talking into the past 60 minutes, so I want to be especially brief here. But I'll say again, you can't communicate often enough or clearly enough the value of the services you provide to your community and your stakeholders. And you should feel emboldened to go forth and solicit joyfully. Americans want to support the work you do. For those of you worried about, well, what happens if we don't get X, Y, or Z? There's a really wonderful scenario planning webinar. It's available on YPTC's website. It's free. It's absolutely worth your time to watch it.
Great. And let's see, the last one, read your agreements. I think this is something that we're talking about, these changes that might occur. Rachel talked about the executive order and oversight of certain grants. And I guess the message we give here is to be sure you are reading all of your grant agreements, even when they're just like the renewal of a grant I've had for 1 million years. Please read those documents because they are contracts, and once you sign them, you've agreed to those terms. So just a heads up, read your agreements, read every word of them, just to make sure that you're capturing all of those changes. And then, as promised, here's the slide with some other resources with links that might be helpful to you. And so again, this is in the slide deck that's available for download. If you're having any problems at all downloading those slides, please let us know and we can help you out with that. Okay, so quick recap here. Again, thank you for the panelists for your expertise and insights. Without a doubt, we have some challenges and opportunities ahead, and really preparation is going to be key. I think we've hammered that home pretty clearly. So we do have a little time left here that we can address some questions that have come in. And let's see. We have one here about the executive order that Rachel spoke about, the requirement for written prior drawdown. How can we best position our journal entries or expense documentation to minimize the drawdown delays?
Ooh, I think that would just require a review of your existing policies and procedures. So that's an internal control requirement. So that is one of the things that's required. One of the components for 2 CFR 200 is having policies and procedures in order to ensure that you have written policies that cover a broad range of different areas related to grant administration. So I would just say to take a look at your policies the way they are now and adjust the language to minimize those delays, and as I said, there'll be more updates related to the uniform guidance that OBBBA are likely going to issue. So don't make changes until you kind of get more clarification. But I would definitely suggest looking at your policies and procedures, especially those financial policies, and see what you might be able to adjust in terms of the language.
Great, thank you. And then closely related, another question that before federal PMS draws were implemented by a federal shutdown, well, it says previously draws were not impacted because PMS draws were fully automated. And so I guess the question is, if the draws are fully automated, would those still be affected by a government shutdown?
I believe so. I believe so. They'll turn it off because there won't be authorization for spending after the end of the day next Tuesday. So,
Right.
And I know.
And remember, it's not fully automated anymore either. You have to put the defend the spend text
Right.
into your payment request. If there's no one to review that, then there's no one to approve it.
Mm-hmm.
And sometimes the government will actually pull the plug on websites and other resources like that during a shutdown. So expect nothing. It's smarter to be pessimistic here.
Okay, thank you. We have a question here. Are you able to share any information about grant writers knowledgeable of the changes and proficient in finding funding sources? If so, my email address is. So Derek, I think that this is a good question for you.
Well, yes, absolutely. We have them here at YPTC as well. I'll reach out to the individual later. But I would like to think that most grant writers out there are doing a very good job keeping up with the changes, even though they're coming at us fast and furious.
Okay, thank you. Rachel, I think this might be one for you. For the Executive Order 14332, will this apply to grants already funded or only for future awards?
Well, a stipulation of that is they want to look at the terms in the existing award agreements. And so that is something that they would like to do. But the thing is that a lot of those awards, and we're talking about, awards that might have been issued, almost a year ago now. But I think that is one of the components of it. How that's going to be implemented, I'm not sure, because it's already been authorized and the funds have been approved. So, but I think that is the intent, but I would focus more on future awards. But I know that has been something that is in the executive order. So I strongly suggest that you take a look at that executive order because it is something that you should be mindful of.
Okay, thank you. And then Derek, please repeat what will result in an excise tax to foreign organizations. Cash, checks, does this include grants from a US-based 501c3?
So it's not about the source, it's about the mode of payment. If you're using a physical payment, cash, a standard bank check, a cashier's check, that would be subject to the 1% tax. If you're making electronic payments, wire transfers, ACH, if you're making crypto transfers for that matter, if you're using credit cards, even gift cards, those are not subject to the 1% excise tax.
Thank you. So we have a question here. Will the 5% minimum distribution for private foundations be affected if there's a government shutdown? Or is there minimal to no effect at all?
There's no effect on that at all.
Yeah.
That's required on a rolling basis. It's calculated and averaged, and the potential government shutdown would not change IRS rules for private foundations.
Right. That's an action the foundation needs to take, not the government.
That's correct.
Right. Okay. Let's see. So we have just, oh my gosh, we have like 30 seconds left here. So this might be a big question to finish with though. From a strategic angle, can you talk about what we should expect in the longer term? 10 seconds or less. Just stay tuned, I think.
I can say it in a couple of words.
Mhm.
Change is the only constant.
Yep.
Yeah. Yeah. Yes.
And preparation will be the best way to support you.
Right.
Right.
Planning, planning, planning.
Yes. Okay, so thank you so much. We've got to wrap this up. If we didn't answer your questions, we'll try to get to those via email. But thank you to our esteemed panel, and thank you for everyone who joined us today. Have a good afternoon. Bye-bye.
Bye-bye.
Bye, thank you.
Thank you.